All right, welcome back inside our proactive newsroom. Joining me now is Kevin Carter. He is the founder and chief investment officer at EMQQ Global. And Kevin's great to see you again. How are you?
I'm good, thanks. Happy New Year.
Yeah, happy New Year to you as well. And obviously talking about the INQQ fund as well, and lots to talk about because I know you just got back from India, and you've talked in the past about what's going on there, and there really is some interesting things to sort of share with the audience. So just give us some thoughts generally on what you're seeing in India.
Sure. Well, I mean, India on paper, is as good as you're going to get for an emerging market. It's the biggest country in the world. If you leave out China, it's bigger than all the other emerging markets. It has great demographics, it has fast growth, and that's driving consumption, and it really stands alone. It's also got the best human capital and a highly digitized public infrastructure that really has boosted the country's growth. And on my trip, there were several takeaways. I think that the one of the big ones was the spread of e-commerce, the spread of wealth into second and third tier India. Some of the negatives about India historically have been that a lot of the wealth is concentrated at the top. You have a very rich top of the pyramid, but then below that, the a lot of naysayers have worried that these things wouldn't spread. But it's become very clear that all of the parts of the India story are spreading to second and third tier cities. There's wealth in second and third tier cities that's rising. You're seeing, the percentage of mutual fund investments from second and third tier cities has gone from just a couple of percent, 6 or 7 years ago to up to almost 20% now. You have entrepreneurs from second and third tier cities. And you also have e-commerce, which is growing at 50 and 60% in second and third tier cities. So that is an important part of the story and something we definitely saw. And then the other takeaway that's, I think, the most fascinating thing happening on the planet right now in terms of, business and competition is what is called quick commerce.
Yeah.
Which is sweeping India, and the quick commerce is arriving very fast. In
What is
in
quick commerce for those not familiar?
Sure. So quick commerce is basically 10-minute delivery of anything. And it's a business model. It's been around for a few years. And in fact, I went to Bogota, Colombia 3 years ago to see kind of ground zero of quick commerce. There's a Latin American unicorn called Rappi, Rappi, headquartered in Bogota, which has scaled this model quite well in Bogota and in Colombia in particular. But it is if you imagine basically anything that you might want on a daily basis, soda, potato chips, toothbrush, really any of the things you'd find at a local market, but you're going to push the button on your phone and it's going to show up in 10 minutes. And the way it works is, in our e-commerce, you might have an Amazon warehouse every, 15 miles or so forth. The quick commerce, they put a micro warehouse every 1 kilometer or 1 mile approximately between each one. And when you push the button, and it's going to be they call it a dark store or a mini warehouse. So it might be right next to a regular store, but there's no entrance for consumers to walk in off the street. And it's going to be about 3,000 square feet. It'll have about 10,000 unique items in it.
Yeah.
And you're going to push the button on your phone, and in 1 minute and 40 seconds, that product is going to be off the shelf and into a bag. And then it's going to get picked up by a delivery driver. This is all happening on two-wheeled vehicles. So you need dense cities, low-cost labor, and two-wheeled vehicles. And this business is absolutely blowing up. It's growing at 100%, and it is expected to grow at almost 50% a year between now and 2030. And it is incredibly disruptive. And what it's disrupting are primarily two things. First of all, 90% of Indian consumer spending today happens at 13 million mom and pop stores called Kirana stores. And they have 150 or 200 items. They're owned by a family. The family works the store. And they're also part of the sort of social fabric of India. I mean, every block has one or two of these stores, and they've been getting digitized. They all take, it's all electric payments now, not no cash. But they represent a massive amount of the economy, and they're getting attacked. Why go down to the store when I can push the button and get the same thing, and I can get 9,000 other things that aren't at the local Kirana. You're also, I think, seeing the two traditional e-commerce leaders, Amazon and Flipkart, have been sort of caught flat-footed by this quick commerce boom, and so I think this is a really big deal because of the scale of the market they're attacking and the speed with which it's happening. I mean, consumer behavior is changing. The instant gratification of having what you want quickly is taking over the country.
Yeah. What about the stock market there? What's that like?
Well, the Indian stock market has been, over the last almost 10 years, it's been almost nothing but up. It's in the last 3 months, however, there's been a correction. That correction has been more significant for the small and mid cap part of the Indian story. But the Indian stock market right now it's a little complicated for a couple of reasons. You have most of the investors in the United States or in India, they're going to use, a broad ETF. And in the United States, that's going to track the MSCI India index. In India, it's going to track the NSE Nifty 50 index. But either way, that's the top 150 stocks for the NSE. And it has a high PE, it's about 22 or so, but it's also got earnings growth of about 20%. So the PEG ratio isn't bad. But when you get below the top 150 stocks, you've seen signs of excess. And one of the other parts of the Indian stock market story is that the number of retail brokerage accounts has gone from about 20 million to 170 million in 8 years. And so you've got 150 million, investors that they've never experienced a bear market. And when I was there, I saw some of the classic signs of excess. A lot of non-investment people told me that their side hustle was trading the shares market, to make some extra money. And those kind of signs are always a little concerning. There's been a ton of option speculation in India as well, with a lot of these new investors. So it's a mixed bag. It's definitely been, in a sell-off since November. And again, for what we do for the Indian internet names, INQQ, I think the PEG ratio is fine. And I think the long-term, the tail of growth that India represents, the opportunity in all things e-commerce is very long. And so I'm not worried about valuations for the internet stocks, but there has been signs of, exuberance in the Indian stock market.
Yeah. Just quickly here as we wrap up, just some thoughts on Donald Trump. Obviously, he's taken over in the United States. There's some contacts with China and what's going to happen there, and I know they're negotiating publicly and probably privately as well. Tell me a bit about what you're seeing there and what you expect.
Well, I have a feeling something's going on, to be honest with you, with regards to Trump and China and maybe India as well. There, maybe 5 or 6 weeks ago, at the end of a press conference, someone asked Donald Trump about China and Xi Jinping, and he said that he thought Xi Jinping was a fantastic man and considered him a friend. And then he made a comment that I've said before, somewhat in exasperation because of all the tension between us and China. I've said, what, wouldn't it be great if we could get along with China? If the United States and China somehow were, friendly with each other or more collaborative and less, just ramming heads, that would be great for the world. And Donald Trump, in fact, said that. He said, if China and the United States can work together, he said we can solve all the world's problems. I don't know if that's true, but it certainly would help with, I think, the way people think about investing in China. And And he's also talked, he's invited Xi Jinping to his inauguration, and he said over the weekend he expects to go to China in his first 100 days and also to India. And so I've been sort of picking up this vibe of maybe there's not going to be 40% tariffs. Maybe this will go the other way. And I was delighted this morning to see The Economist wrote a piece yesterday talking about this very idea. So we'll see what happens, but I'm I'm uh, I'm optimistic based on some of the observations I've made in the last month since the election.
Absolutely. Kevin, thanks so much. Great insight as usual, and really appreciate your time. Good to see you again.
Thanks, Steve.
All right, there's Kevin Carter. He is the founder and chief investment officer at EMQQ Global.